from Cooper Levenson. He is a partner and chairman of the Bankruptcy and Financial Restructuring Practice Group and has practiced exclusively in banking, creditors' rights, bankruptcy, and commercial litigation since 1984. He has served as an adjunct professor in business law at the Richard Stockton College of New Jersey and at Atlantic Cape Community College, and works out of the Atlantic City office of Cooper Levenson Attorneys at Law. Eric is a prolific author, having written and edited numerous texts in his area of expertise. He is a magna cum laude graduate of American University and Cornell Law School. Next, we have Jared K. Stiles, who is also a partner and member of the Tax Law and Estate Planning Administration and Bankruptcy and Financial Restructuring Practice Groups at Cooper Levenson. Previously, Jared worked with a Millville, New Jersey law firm where he created a new practice group specializing in trust and estates, asset protection, tax controversy, special needs planning, and elder law. Jared earned his law degree in taxation from the Washington University School of Law, St. Louis, Missouri. He earned a BBA degree in finance and a BA degree in government from the College of William and Mary in Williamsburg, Virginia. Jared is a frequent presenter of topical seminars and has co-authored multiple publications in his area of expertise. And finally, we have Lou Bongiovanni, CPA. Lou is with Fitzpatrick, Bongiovanni, and Kelly's business consulting division and has been with the firm since 1997. He is a CPA and certified valuation analyst who earned a BS in accounting and a master's in taxation, both from Villanova University. He is also a past chapter president of UNICO and is active in local chambers of commerce. Yay, Lou. Lou spends much of his time in the outsourced CFO area of FBK. He enjoys working with medium-sized companies in a variety of industries as their outsourced CFO. He also concentrates on tax consulting and business valuation services and is a familiar educator with our chamber webinar series. He has 3 active sons and enjoys living in Linwood with his wife, Jennifer. And with that, I'm going to turn the program over to Eric. Thank you, Eric, and take it away, as they say.
Oh, thank you, Vicki. Thank you for hosting this webinar today. As Vicki was indicating, I'm a restructuring lawyer. In addition, I'm co-chair of our small business group, which is focused on providing advice to small business clientele. I've been helping small businesses survive for over 40 years. We made it through the 90s with the RTC times. We made it through the 2008 collapse of the economy, and we'll make it through COVID. COVID will be in our rearview mirror before we know it. As I've told our hardworking associates, you do not know what hard work is until you own your own small business. AOC bragged about doing doubles as a waitress. A small business owner, particularly during the season, works endlessly and must be everything from the ultimate host to the one to clean the bathroom or climb on the roof on a Saturday night when the air conditioning doesn't work. They really, truly do not clock out. The level of suffering by small business as a consequence of COVID is absolutely immeasurable. I can cite statistics like that we've all heard. 40% of all small businesses will not reopen, or more people will be placed on unemployment as a consequence of COVID than were on unemployment during the Depression. They don't come close to capturing the personal tragedies, not close. Let me give you a couple of real life examples. One of our clients for 35 years inherited a restaurant from his father, who inherited a restaurant from his father. He actually called me to tell me that he was giving up and he was considering taking his own life because he had so much life insurance, but he couldn't bear to dishonor his grandfather and his father and his whole family. Another client who has one of the most successful hotels in South Jersey, employing hundreds and hundreds of people. He was doing everything possible to get the hotel free of germs, complying with everything that could possibly be. It was as healthy as a surgery center. Right before the 4th of July, they had an incident of COVID. It spread throughout the back people, the staff, and as a consequence, he had to close. He hasn't reopened, and he doesn't think he's going to be able to reopen. The stock market is not the economy, but it can be a barometer of what to expect down the road. It is at an all-time high because the hedge funds and the talking heads believe recovery is right around the corner. They understand the pent-up demand. They understand all of us want to go to a baseball game, particularly me being a hardcore Phillies fan for 47 years. We all want to go to concerts. We all want to have a life, and we all want to visit our grandchildren. What we need is we need a bridge between where we are today and recovery. The CARES Act is that bridge. Full recovery, clearly to me, is not possible without the vaccine, without the wide dispersion of the vaccine. In the interim, the CARES Act has already helped hundreds of thousands of businesses survive. God willing, it will help all of you survive until the vaccine reopens the world. Jared and I have been using every tool provided by the CARES Act to get our clients money. We have been fortunate enough to get them over $150 million, most of which will be completely forgiven. So we're talking about truly money that goes right to pay employees, right to keep the businesses alive. The payroll protection plan, PPP, is one of the key tools in the CARES Act. Very simply stated, it provides businesses with a fully forgivable loan from the SBA to replace the income that was lost when the governors forced them to close. It was designed to save the businesses and, equally as important, save the employees by generally requiring that the majority of the money goes to payroll. Had the shutdowns been a near twice as long as anticipated, the program probably could have worked. As we are all painfully aware, the lockdowns largely continue. To various extents, Congress passed this further bill primarily to bridge this gap, the gap from, again, where we are to hopefully where we're going to be. This 5,700-page bill provides us with additional tools, including a second round of PPP, which will be our primary focus today. Jared and Lou will explain how to maximize the money you can receive under the CARES Act and help you through the maze created by this enormous and complicated bill. Gentlemen, the floor is yours.
Great. Well, thank you, Eric. And as you can see on the outline, hopefully everyone can see, we're really going to try to touch on some major points of this new rather large stimulus package. Unfortunately, it's needed for so many businesses. So we're going to try to touch on some major points, but we're only going to scratch the surface of a 5,700-page package that came out 2 weeks ago. So if you see my eyes wandering down every once in a while, it's I haven't committed all of it to memory here, and I want to make sure I'm accurate with it. So the nature of this presentation, I'll give a short segment. So will Jared. We'll go back and forth on 2 times, and then we'll allow time for questions and answers there with it, and hopefully leave you with a better general understanding of what this second stimulus package looks like, because in ways it's very similar to the first one, but in ways it's very different. And I know you can open up your email, and whether it's your industry associations feeding you information, or the banking system, or government agency, it's all good stuff, but it's overwhelming. So we're going to try to maybe tell you some things to focus on and help you prioritize some things, and then you can move forward, because obviously you all have businesses to run it as well. So this isn't the only thing on your plates. So the first question that we have been getting a lot over the last 3 weeks since it was passed or so is who's eligible in this wave, because there was clearly uncertainty in the first wave of who was eligible there was questions, things were being developed. There's more clarity on this one being the second formal wave of PPP, or PPP2 as they refer to it. So it's for businesses that are 300 or under, and for most of you in the audience, that's not an issue. It's 300 employees or under. There's three stipulations. The second one is that you used or intend to use the PPP money that you received in the first round for the purposes in which it was intended. You didn't misuse it in any fashion. And the third stipulation, which is completely new here, so I want to take a couple of seconds to focus on that, is that your business in 2020 had to be down compared to 2019. And that's, I say business, your revenue has to be down when comparing it quarter to quarter. So if you look at the first quarter of 2019 versus the first quarter of 2020, and it's down 25% or more, then you're eligible. It could be any of those four quarters, first, second, third, or fourth. I've seen some indications where fourth wasn't included. Fourth is included. So you look at the first quarter of 19 versus first quarter of 20, second quarter of 19 versus 20, and go forward. And if it's down, revenue is down by 25% or more, you are now eligible. So for example, if you had a business who your numbers weren't really down very much because of it, or some of them actually went up, you would not be eligible for this, right? They're trying to target this where the first round was more for almost every business, is assuming everyone got hit in a certain way, not really quite knowing how much or to what extent. This allows them to really focus on businesses that are down, and they arbitrarily pick 25%. That's quarter over quarter. Another question we're getting is, what about in, let's say, the second quarter, I'm down 25%, but the next quarter I'm up 25%. Does that disqualify me? And the answer is no, it doesn't. You actually are still eligible. They're looking at it quarter by quarter. As long as one quarter compared to another is down, you can be up, and can be up dramatically. And that's just the nature of this. And you'd still be eligible. So, these programs aren't perfect. They're designed to really try to help businesses, and that's the stipulation. So that's what you want to really focus on, is quarter over quarter, and it's revenue. If you have cost of goods sold, completely ignore it. It's just strictly revenue. How much is available compared to the initial PPP? Well, that has changed a little bit. So for most companies, it's pretty much the same amount. It's 2.5 times your average monthly payroll. Jared's going to talk about seasonals in a minute, so I won't go down that path. However, they acknowledge that there were certain industries, ones with the NAIC code of 72, starting with 72, that were hit especially hard. And that's the accommodations business, the restaurant businesses, any food service business overall, who was hit especially hard, is now entitled to 3.5 times their monthly, their average monthly payroll. So before, if you're in any of those industries, you're eligible for 2.5 times. Now you're eligible for 3.5 times. So you do need to redo that calculation and get the higher amount you're eligible for. So that's big. And I know a lot of people in the audience are in those industries. So please make sure that you take note of that and you calculate that properly. How does your prior PPP loan impact the PPP2 loan? I don't know how much these stipulations might impact the audience here, but if you recall, PPP1 had a $10 million limit, so you couldn't, get a loan for more than 10 million. The limit on this second wave is 2 million. So if you do your calculation and the numbers work out where you're eligible for more than 2 million, you're capped at 2 million. There is also a further cap, and again, I know this is probably a small segment of the audience, where overall, when you take the first round of PPP and the second round, that can't exceed 10 million overall. So if you received, I'm making up numbers, 9 million in the first one, and now in the second one, you're entitled to 2 million, you'll only get 1 million because you need to hit your 10 million cap. You can't exceed 10 million. Again, I know that's a few, not very many of you, but want to make sure that you understand what the limitations are as it relates to the loans this wave going forward. I'll let Jared hit those next bullet points. Make sure he's not muted.
All right, thank you so much. We were running into a little bit of technical difficulties in terms of me being able to unmute myself. I apologize, but we will move forward on this. Thanks for all the wonderful information, Lou. So I'm getting a ton of questions on what is the PPP2 loan process. And I want to clarify that although we're colloquially referring to this as PPP2, what this really is a second draw of PPP loans. That means that if you've exhausted your first round of PPP and you fit into the eligibility criteria that Lou so eloquently described, we can take a second draw. Now, one of the important items that I want to go over is even if you are not eligible for a second draw of the PPP and you incorrectly calculated your PPP1 amount, you are not out of luck. There is a mechanism through eTrans and your local bank who you applied through to make an amendment to the application. Now that process is very complex. There is not a ton of guidance out there as to how they're actually going to effectuate it, but it is in the statutory text. So what does that mean to you? It means that in Eric's example of the business that received 100,000 in PPP1, and now they should have received 500,000, we can get that $400,000 spread. That's a tremendous tool. And again, look, that isn't because you filled out the application incorrectly the first time, but more of a result of the SBA changing the guidance and changing dates that would impact your eligibility. So again, that's an important part of this puzzle, the fact that you can make amendments to that original draw on PPP. There are timing issues. There are other practical considerations. And as an attorney, I hate to do this, but I have to give you a laundry list of disclaimers. Everyone's situation is going to be different. There is no one size fits all. Even in the event that it does not appear as though you may qualify for a second draw of PPP, with the help of professionals, you may actually be able to. The revenue test that has been advocated is very ambiguous. I'm going to leave it at that. They state that it's ambiguous within the interim final rules and regulations that they process. We anticipate there to be a lot of changes to this program as there were in the first. How many changes? Well, in the first round of the PPP program, we were getting weekly to bi-weekly fax updates, fax frequently asked questions that the SBA was publishing in addition to the interim rules that you would be able to rely on. So you would be getting a publication stating what you can and cannot do after the fact, because again, as several of my colleagues have stated in the past, all of this legislation is built on sand. It's going to rise and fall with the tide of political waters as well as public popular opinion. What do I mean by this? Lou's going to get into the tax treatment of the PPP loan forgiveness, but needless to say, it is not shocking to us that legislation was codified that has dramatically changed this. Now, I'm getting a lot of questions and a lot of clients are contacting me stating, we heard that the portal is open. Can we apply for PPP round 2 today? The answer is yes, if you're going to certain banks. This is not a one-size-fits-all program. Certain small minority-owned banks and otherwise based on the amount of income the banks have as well as asset classification can determine when these loans open. Theoretically, loans opened on Monday for people who did not apply to the original round of PPP funding. Now, if you didn't apply to the original round of PPP funding and you never took a first draw, there are different rules that apply to you. Again, this is complex, and again, fact and circumstance intensive. We have certain size limitations. There are exemptions to these size limitations, depending on type of business and otherwise. Again, I don't have the time to get into all of them, but it's significant. First round, we did not have a definition of seasonal businesses and the seasonal business eligibility. Second round, we do. These are all important factors. When we talk about a seasonal business and their eligibility, obviously, if you are a restaurant in Margate, for example, or Cape May, you're going to do the bulk of your business over the summer months. I mean, it's not rocket science here. So how am I going to account for payroll and spread over the course of a year when my main income is squished into such a short period of time? Well, thankfully, the government recognized this and allows you to do a seasonal calculation. That seasonal calculation will allow you to take your 12 best weeks and calculate your payroll that way. Again, there are consecutive weeks, and there are a bunch of finer shade of meaning as to what's eligible, what's not. But again, the seasonal eligibility can result in, we've seen up to a 4 to 5 times multiplier based on if they did it on an annual basis, which is tremendous. When you're talking about hundreds of thousands of dollars going into millions, these are big numbers. I'm not going to go into any great depth on the SOS grants. The SOS grants are the shuttered venue grants. I will state that if you take a second draw of PPP or even an initial draw of PPP after December 27th, you will not be eligible for this grant. This grant primarily applies to movie theaters and live concert venues based on the wide variety of qualifications, but it is going to be significantly more lucrative to those type of owners, provided that the funding comes out. We don't know when the funding is going to happen. It's billions of dollars set to go, but we don't know how many people are going to actually apply. So again, you have to weigh your cost benefit analysis. It's a case by case basis. And with that, I'm going to turn it back over to Lou.
Okay. Thanks, Jared. A lot going on there. I have some questions that are buzzing in my mind as you go through those bullet points. I'm sure we'll get to it at the end. And as Vicky mentioned, I believe in the beginning, if you do have questions there, probably the best thing to do is type it in the chat. Vicky's looking at that, and then we'll wait until the end, and we'll address as many questions as we can in the chat. And then if there's some that we didn't hear, we might throw some questions out that we anticipate you might have as well. So please, along the way, we want to get this information out to you, but please type in any questions you might have, and we'll be glad to address them. So now, from the tax preparer world, this first bullet point here in my section was huge. It was something that was very difficult to plan tax-wise. Come the end of the year, we basically had to do tax projections in 2 ways, with the PPP funds being non-taxable, the forgiven funds being non-taxable, or with them being included as income and taxable. There was rumblings, and finally, near the end of the year, it was determined, it was like a Christmas present to all small business owners, that the PPP funds that you received will not be taxable to you, and how you use them, assuming you use them in the way for them to be forgiven, would be fully deductible. So if you received $100,000 in PPP money, you wouldn't have to pick up $100,000 of income. But if you choose that $100,000 for payroll, for example, you would get a payroll deduction for that. So you would have a loss, in essence, if there's nothing else going on there, of $100,000 on your taxes, and you would get the tax benefit of that loss. So, so that is going to be an excellent tool to use in for 2020 and beyond, frankly, it'll have some implications spilling into 2021 if you use the planning properly. And again, that's beyond the scope of this, but it's important to know definitively that that money received, as long as it was forgiven, is non-taxable. And as a result of that, you should be seeing a much better tax bill than you would have received if it were taxable. Now there's rumblings as far as the new administration, tax rates going up and things of that nature, again, beyond the scope of this, but very much so needs to be kept in mind with the fact that everyone believes, no matter what your political affiliations are, that tax rates are going up. So the fact that there has been some tax savings here in 2020 is excellent, but you can use some of those tools into 2021, not quite knowing when the tax rates will go up or to what degree here. So that very much is a great gift for PPP immediately, but also a good planning tool going into the future as far as that. And that's true with the PPP, but it's also true with the EIDL loan, that 10,000, you could get up to a max of 10,000, is 1,000 per employee that you got as an advance. There was two questions with that. Is number one, was that going to reduce your PPP forgiveness amount? And the answer is no longer, so no. And then number two, is it going to be taxable? And the answer is now no. So that advance up to 10,000 that you received is no longer taxable, nor will it reduce your PPP forgiveness, as well as this PPP is not taxable. So that's two really great things as it relates to income tax. There's issues with basis and things of that nature, again, way beyond the scope of this, but it doesn't reduce your basis. And that is also a good thing. But again, I don't want to get too deep into the tax part of it. New allowable use of the proceeds for the PPP loans. Now, this is important because I get in this question a lot. They've expanded what you can use the funds for in order for them to be forgiven. And some of the people who have the PPP, original PPP, are still struggling, or we're still struggling on being able to use it to achieve total forgiveness. Now, this expanded definition does not only apply to the second PPP loan. Some people think it only applies to that. It is actually retroactive. You can use it for both the original PPP loan that you received as well as this new one. And I'm going to rattle it off. That I have to look down on because I don't have the exact amounts there from memory. So 60% can be used for payroll. We know that. The other 40% is designated for things such as mortgage interest, real estate, rentals, rental expenses, as well as utilities, right? So that hasn't changed. What they've expanded to is you can use it for 4 other purposes, and I'm going to just make sure I get the wording exactly right. It's the covered operational expenses. So that's a category of expenses mostly geared to IT and payroll related expenses. So you can mine through those. And again, this is only for people who are struggling being able to have it forgiven under the conventional 60% payroll and 40% other expenses. If you really need to find other categories, you could drill down into these 4 additional ones I'm mentioning. If you don't need it, you can stop listening to me. Okay. The second expanded category is covered property damage costs. So we've all seen the horrific videos and pictures as far as rioting and looting and things of that nature. They're kind of encompassing that into this and saying, if you had damage from any of those things, that's an expanded use of the PPP money in order for it to be forgiven. Third category, covered supplier costs. So this one is kind of a very broad catch-all here as far as these costs. So they're saying if you incurred costs prior to COVID happening that resulted in you having to not be able to recoup those costs or use them to turn a profit, then those costs, you can use those against it. So if you bought, I don't know, a piece of equipment or something like that in anticipation for something, then COVID hits, and now all of a sudden you can't benefit from that. They're now allowing you to incorporate those costs into PPP forgiveness, as well as perishable. So restaurants are a classic example. Everyone remembers what happened 4th of July. Governor says, hey, you could open, then all of a sudden he does an about face. Restaurateurs especially lose a ton of money. Those kind of costs now get encompassed in here too, which is wonderful. Again, if you need it. If you don't need it, don't worry about it. And the last thing is COVID-related costs. It's actually called covered worker protection expenditures there, or in essence, COVID-related costs. So all those wonderful masks that we have, all that, the protective glass, I do want to be in the protective glass disposal business after a couple of years. I'm sure that'll do real well. But all of those expenditures all now get encompassed too. So it's great for people who maybe struggle to be eligible for PPP forgiveness. All this expanded use is wonderful news. Next bullet point, employee retention tax credit update. This has gone through a lot of changes here, and I won't get too deep into it with you with that, but this related to 2020, where if your business went down by more than 50%, and they gave all the parameters what that meant, you were able to up to $5,000, it's like 50% of employees' wages up to $5,000, you would get a tax credit for the cost of the payroll to those employees. That was true only if you did not get PPP funds. So a lot of people didn't pay attention to this because PPP money was much richer and would give them much more benefit than this employee retention tax credit. Well, as time went on, they said, well, you know what, you can use this, but you have to prove to us that the money you used to pay these people wasn't PPP money. Again, another hurdle that you would have to work through if it applied to you. And that's basically what happened in 2020. Now, in this new act, they've expanded it for up until June of 2021. So for the first 6 months of 2021, they're extending this employee retention tax credit. Right? It expired at the end of 2020. They're expanding 6 more months. They've also made it easier where they increase it from 50% to 70% of the cost of an employee can go up, and they don't limit it to $10,000 per employee. They increase it to $40,000. So if this works for you on your fact pattern, this could be a very good tax saver for your employee costs, but there are a number of hurdles you have to get over, and they're changing, or they've had changed. So maybe worth revisiting if you have the right fact pattern. That's all I'm going to say with that. And same with the extension of the deferred payroll taxes. This was the memorandum issued by the president in August, where you can say you could postpone the payment of Social Security taxes withheld on the employees for a period of time. It was from September to December of 2020. Any payroll taxes, employee payroll taxes, you could postpone paying it into early 2021. They've now extended the timeline in which you could pay those payroll taxes. And again, very specific fact pattern there, but if it works for you, that could be a rather big savings there. So I would encourage you just to peek at that, ask your tax preparer, whoever's helping you with the PPP, or any of these two apply to us, because I know there's been changes. And then if the answer is yes, I strongly suggest you take advantage of it. Jared?
Brigitte, we need to unmute Jared.
Yeah,
There we
I was trying to unmute it. So
Okay.
host needs to allow me to do so. So, all right. So one of the main benefits to waiting to apply for forgiveness, and we've been advocating everyone to wait to apply for forgiveness, is that if your loan is under $150,000 or up to $150,000, you're going to see a simplified form. Now, obviously, you're going to have to make all the same representations and certifications, but there's going to be significantly less paperwork. This is ostensibly going to be a one sheet. What is a one sheet? A one sheet is a one-page document where basically you say that, oh, I have used the funds correctly. I've used it to pay for payroll and other eligible expenses. And I swear that that is the truth. So help me God. And there's not going to necessarily be the level of documentation that is required for some of the larger applications. And by the larger applications, I mean obviously anything from $151,000 up to $2 million. And then obviously anything that is $2 million or more, we have been told that the policy is going to be an automatic audit on the PPP loan. Now, when I talk about an audit, I'm not talking about your traditional accounting audit, although it is a little similar in that they are just going to take a look at your underlying documentation, make sure that you did not fabricate these numbers out of thin air. The business was operational, that, for example, we did not go and buy a Lamborghini or a yacht with these funds, which I'm sure some of you have seen in the news. And again, that audit is automatic if you received $2 million or more of funding. So we also are going to discuss the expanded eligibility requirements of 501Cs, specifically 501C6s. Those are sporting leagues. Again, even if you were not eligible for the original funding of PPP-1, you may be eligible for PPP-2. We expect there to be expanded eligibility on a rolling and continuous basis. For example, in PPP-1, and this is relevant only insofar as we have an office in Atlantic City, but gambling facilities were prohibited from receiving it under SBA guidance and regulations. They wrote in a carve out for that, as well as anything that was derived of a sexual prurient nature standard. Again, SBA is a government agency. They have certain types of and classifications of businesses that are exempted from receiving funds. All of these standards have been significantly relaxed given the policy reason of PPP, which is to keep all businesses open. You're not only helping the businesses themselves, but the employees. If you keep the employees employed, there are less people who are going to technically apply for unemployment. Again, those are the policy consideration. Now, we represent several transportation companies. As you can imagine, they are in dire straits. I don't know how many people here have children, but a lot of school has gone remote. So you are looking at these transportation companies that don't have a fleet of buses and no longer have anywhere to go. Obviously, with shutdowns and otherwise, you're going to be seeing a decrease in bus rental. The government recognizes this. There are targeted relief for these companies. Again, that's through the Search Act, which is really beyond the scope of the presentation here today. But I want to tell you that if you are in an industry that has been deemed ostensibly extra vulnerable to this pandemic, there may be additional funds specifically carved out for you. Now, by taking some of these special carve-outs, you're forfeiting other rights. So again, you need to do a cost-benefit analysis before you take any money. Again, when we're talking about the PPP program, we're talking about the greatest government giveaway in history, especially with those tax attributes. The Internal Revenue Service certainly did everything within their power to make sure that you would not be getting the so-called double dip. However, in a publication last week after this came out, they waved the white flag, stated that, you know, the legislation is clear and they are not going to consider the cancellation of debt income, and they will allow you to take the deductions accordingly, as Lou had previously stated. How long does the SBA have to audit PPP applications? I'm glad you asked. It is 6 years. That's a long time. What I recommend everyone do is they make sure they have their books in order, even if they are filling out the one sheet. It's significantly easier to go through and put together a file now than to try to recreate it 6 years down the line. I've been part of many audits over the years on a tax perspective, and it is always difficult to come up and recreate some of these records. Again, the best practice is always to do it right the first time. And with that, I am open to taking some questions. I see that there are several in the chat. I am going to take the first question from Peter regarding the seasonality of operating a hotel, banquet center, and restaurant. It is not the total gross payroll for the 12 weeks. It is, you use that to establish the baseline, but you do not just multiply that by 3.5 to get your ultimate PPP calculation. Again, you're going to have to normalize it over the course of a year. And other eligible expenses that are incurred during that time period are also added to it. I'm going to turn it back over to Lou to go over Denise's question.
And just one add-on to that one, Jared, is you can use 2019 or 2020 payroll now, correct?
That is correct. You can use 2019 or 2020 payroll. We have found that almost universally 2019 is the better payroll to use. However, in certain circumstances, specifically for eligibility purposes, you may want to look at 2020.
Right. Yeah. So that was just another thing. And the payroll services overall, and I don't want to say across the board, but overall are doing a nice job giving these customized reports. And again, they're just trying to keep track with these changing stipulations. But one thing I will caution, and it's probably less now than it was initially, make sure you check with your CPA with these payroll reports, because the payroll services are not tax people. They don't necessarily know all the nuances. And I did see early versions of a lot of these reports that just did not capture everything that they needed to. So just make sure that they're up to date with that. I don't know if Jared, you had a similar experience.
I did have a similar experience. I want to point out specifically, and again, this does not make sense to me, Lou, but it's explicit in the statute that payroll taxes that are federal are not included, your FICA taxes, in your calculation. So
Right.
I've seen a lot of the early ones by large national payroll providers who did include that. And I had to carefully explain to the clients that their number was smaller than it was. And it's not a comfortable conversation to have, but it's better to get these things right than to take the risk, in my opinion.
Yeah, and to that point also is if in the first round it was slightly off and they did receive the funds there with a number that wasn't precise, because again, a lot of them were, I think Eric mentioned that, were very quick to go, because they were in a panic mode and the information wasn't clear, and they calculated based on what they thought was the accurate methodology and including the right expenses. Now you have the time, you want to incorporate that all and do the calculation accurately. Plus, they've expanded things such as the health insurance and retirement plans, things like that, that were not really crystal clear. They've added more to that payroll definition. So it's definitely worth revisiting, and the prior reports that the payroll services were doing need to be updated for this one, especially if you're doing the 3.5 times. Absolutely, you want to make sure you have that right. So just be cautious. Don't be so quick to say, okay, got the number, let's get in the application. The one question we're getting also is, is this going to be kind of like the first tranche where it's as soon as they sit, yes, you're literally sitting by your computer waiting to hit the submit button there, or is it going to be more like the second one, which there was ample time, ample funds, everyone kind of calmed down and got through it? I don't know that we can answer it exactly because it has to play out, but indicators that I see is it's going to be more like the second one. It's not going to be this mad panic that, oh my God, it's going to run out immediately. But having said that, it does expire at the end of March, which isn't that far off. So you don't want to drag your feet on it, but you don't want to be so such that you do it in such great haste that that you do it inaccurately, and now you have a wrong number there. So just take your time and be careful with it, but do it promptly, in the next week or two. As far as the question from Denise, should businesses load as much as they can into the 40% non-payroll expenses for forgiveness so they can take advantage of this employee retention tax credit as possible? Well, the way that the calculation works is it looks at your payroll, and that payroll amount has to be 60% of the total of your PPP loan. So once your payroll hits that 60%, then you want to use the rest for non-payroll if it is available. And I think that's what she's alluding to. And yes, I would agree with that. So if your payroll would say satisfy 100% of the PPP, and you say, okay, I got it, I don't even have to worry about the non-payroll items there. You might want to not do that. You might want to only cap it at 60, use the non-payroll for the other 40, so that you can argue that not all of the PPP money was used for payroll, and then take advantage of the employee retention tax credit. So absolutely, that's one strategy that should be looked at. And if some of you don't quite follow that, you're welcome to ask me or ask the tax preparer there about it. But that is a strategy worth looking into for sure.
Okay, I have a question regarding audits and what type of information that you should retain as a business. So this is a twofold answer. The first thing that I recommend everyone keep is any documentation they use to substantiate their original loan amount. And then I would keep a detailed journal with receipts and payroll reports and everything else on the amount of funds that you actually expended over the time period. We have a lot of businesses that have been able to do it with pure payroll. Sometimes that makes sense from an audit perspective. But as Lou just stated, if we do the 60-40 and use the 40%, there are other strategies to result in a better gain for you in the long run.
Jared, there's a question above that. What is the definition of a seasonal business? You want to take that one since you did that section?
Yes. The definition of a seasonal business is a business that's in operation for a period of months, and they do a certain amount of revenue. There's a revenue test component to it in the new IFR. It is what it sounds like. Again, everyone's facts and circumstances are going to vary, but if the question is, can I be in operation for 12 months and still be deemed a seasonal business? Under certain circumstances, you can.
Yeah, as far as the payroll costs, as was mentioned, is the payroll select state payroll taxes. You have the health insurance and retirement costs relating to payroll. And payroll costs, I believe, also factors in the cost of doing the payroll, like a payroll service and things of that nature. I believe that falls into payroll costs as well. So they've expanded, they brought in somewhat the definition, so you want to make sure that you capture that. And there's a list of that if I've missed one off the top of my head, but that's the bulk of it.
Okay.
You want to get this other one from Peter there about multiple applications, because I think it's a good one, because that was clearly the strategy in the second tranche of PPP, but I don't know if that's a good strategy for PPP too.
There's always a degree of risk in doing this. If I'd like Eric's input on this as well, but typically I would say that if you're putting it in with your underlying bank, you're in a better position to deal with this than if you are to send out multiple flares. The last thing I would want to do and see is potentially having someone getting approved with one bank and then they never contact you, or if, for example, because you can only have one application in and approved, the other bank to cancel you. Like, I mean, there are a lot of things that can go wrong with that. It's a fact and circumstances intensive test. I would point out that this brings me to another point, which is the affiliation rules. If you have common ownership in multiple businesses and you're applying at multiple entities, they may aggregate your total number of employees, which may easily put you over that 300 employee cap. Again, unfortunately, it's not based on FTE. And Lou, I haven't seen anything that would have changed that. The SBA came out with guidance that said that it's any employee. And that's really unfortunate because you'll have people who work 5 hours a week and they count as one employee for the purposes of the application when we're going through the threshold. Now, obviously, they care about number of FTEs on the forgiveness end, but on the front end, it's total number of unique employees. And the affiliation rules can really trip people up. Now, again, there are ways around these affiliation rules, specifically if you fit within carve-outs, but again, fact and circumstance intensive. Good example of this is franchises. When you go through the PPP2 application, I also want to point out that you're certifying to making these applications in good faith, and you're subject to both criminal prosecution and civil penalties. So, Eric, what are your thoughts?
Yeah, we actually had the same question about, do we need to apply to two related programs within the CARES Act to make sure that we're okay? Specifically, Jared, as you'll recall, we have a client, movie theater client, who under the shuttered program would get millions and millions of dollars, clearly in excess of $3 million. Under PPP2, they would get $400,000 or $500,000. Clearly, they'd like to do this shuttered business. We would like to apply for both. The statute seems to say that you can't have both. Can you apply for both? Is there zero risk applying for both? Is there, what level of risk is involved there? I tend to agree generally with Jared, that you should select the professional that's going to help you get through this process. Select a bank. It is better if you're a VIP in your bank, because of some of the problems we had in the first round may in fact continue into the second round. It's not necessarily in some of the smaller matters preparing the application. It's also being able to get the application into the right bank, getting somebody to look at it on an expedited basis. Because again, Lou, as you pointed out, we don't know if we're going to run out of money, before we run out of days in January, or whether we're going to be sitting here the first week of March and saying, I can't believe they didn't spend all the money.
Right.
I kind of feel like it's going to be closer to the latter, because there was so much upheaval when the Ruth Chris's of the world, the Ritz-Carltons, the Marriott chains, when they all stole all the money. And, by separating it and making it look like that, I think part of the 10 million to 2 million was to stop that. Part of the letting the minority banks go first was so that regular normal business, small business owners could really get the small business PPP. It wasn't designed to give to political action committees. It wasn't designed to do a number of things. When one of the gentlemen, I'm not sure who it was, I think it might have been the head of the Treasury Department, said, I'm going to audit everybody over $2 million. It was part of the same policy decision of stay out of this. We're here to save small businesses. We're not here to give to people that don't need it. There's plenty of money for everybody else.
Yeah, and I believe that is probably why there are different standards in the second draw, specifically prohibiting publicly traded companies from making application, because they have other lines of equity and credit. Now, I am not going to condemn anyone who was eligible under the letter of the law from making application. That's not what this is here for. Everyone pays their taxes. And at the end of the day, if it's all going to pay employees, everyone has employees. However, I think this is a much better and more narrowly curtailed and targeted program than the initial draw.
Yeah, agreed. The one thing I remember seeing is that they said it is okay if you use a different financial institution for the second round. However, from a practical standpoint, that's not the best thing to do. I think if you got the first round, some people were disenchanted because it didn't happen fast enough or whatever the case may be. And then afterwards, when everyone had what they needed, people tended to calm down. But some people ended up having a bad taste in their mouth with the way that their bank handled it, but ultimately it landed okay. With this second round, you could use a different bank, but from what I've seen from a practical standpoint, not the ideal situation, because as Jared mentioned, this is a second installment. All of the portals are set up, all of the processes have now been refined. So it'll be a smoother go around this second wave as opposed to the first one, almost guaranteed. So to switch banks there, you should really have a good pressing reason to do so. Jared, do you agree with that?
I agree wholeheartedly. Again, there are certainly certain large national banks that have pending lawsuits against them that did not necessarily handle this well, but I think it was an opportunity for some of the more regional, smaller banks to really come through for their clients, and by and large, they have. And again, just because your application did not go through as smoothly or as quickly as you believed it should, it's not necessarily a function of the bank itself. The portal was down like repeatedly, especially during that initial round of funding. We received phone calls from multiple banks asking us if anyone was getting applications through because the SBA portal was overloaded. Again, this infrastructure was probably last updated in the 90s, from what I've been told
Right.
by several SBA reps who will remain anonymous. So again, your banks are doing the best that they can. And look, in certain circumstances, does it make sense to move to another bank? Sure. There are always exceptions to the rule. I will tell you, you're going to have to open up a brand new account, and that takes time. And the level of identification and everything else, because of identity theft, may delay your application even further. So again, I would recommend you staying with your bank unless there's a pressing issue to move the application. And again, you cannot even move your amendment if you wanted to a different bank from the first round. So I want to make that very clear as well, because they have to go through E-Trans.
And Jared, if I could interject for a minute, the one thing we noticed, because we keep track of all the information as it's flowing in, out of the 31 people that have come to us already that we did not represent previously and did not have an accountant help them, a provider, out of the 31 of them, 16 of them did PPP1 wrong. They either didn't do the seasonality right, they didn't do the calculations right, they didn't include a number of things that you're allowed to include, and as a consequence, they can amend. If it's only a small school of 31 people, but if that's any indication of what's out there, clearly there will be a staying with your bank, because the amending part of it will be very, very valuable as we go forward. So the beauty of the CARES Act truly is, not only am I going to give you more, not only am I going to give you potentially 3.5 times if you fit within the right parameters, but I'm going to let you fix it. So, I would strongly urge anyone who did it themselves, or anyone who, which was the second highest thing I noticed was, I wasn't qualified. I didn't lose enough money in order to do PPP1. They all thought, or many of them thought, that they weren't qualified. So you really do, and I don't want to sound like I'm chasing an ambulance or we're encouraging you to go see an accountant or a lawyer, but I'm just telling you the facts are that 16 out of 31 left money on the table, and a number of people we've spoken with have said, well, I didn't do PPP1 because I didn't qualify. There's no way I could have qualified. I didn't file bankruptcy, so therefore I must not have suffered a sufficient amount. So I think that's really an important thing to know as well.
And again, look, the 25% decrease on the PPP second draw, there are a wide variety of ways to get there. Again, look, we're looking at an annual test. Lou did a great job in pointing out that you only have to lose the money in one quarter as opposed to a year over year. Now, there is a test where if you do year over year and you have it so that you're down 25%, then you qualify. But the math doesn't work out so that if it were and you don't have a single quarter where you're down 25%, you can then aggregate all four
Right.
down 25%.
Right.
So I don't know why they have that there. It'll be easier for them from a qualification perspective, certainly, but it doesn't really make a ton of sense to me as to why they explicitly put that in there. Lou, feel free to interject and tell me why that we would be doing that over a specific quarter.
Yeah, I don't know. As you said, the math wouldn't work, so I don't know why that stipulation would be in there. I'm sure there's some odd fact pattern, but I can't think of one. And one question I wanted to ask Jared there, because I've gotten a couple of these questions and like his input is one of the stipulations for PPP2 is that you use the funds that you received and they're all going to be forgiven. What if some of the funds that you received in the PPP1, you weren't able to use it up because you're a transportation company and you just didn't have the payroll and you couldn't satisfy it. So now a portion of that's going to convert to a loan. Does that disqualify you from the PPP2 application?
I would say that it's an unsettled issue. I would have to think from a policy perspective that we will be getting additional SBA guidance, but that you would be able to apply for that draw. Again, look, this is used as a lifeline. I don't think it's going to be used as a disqualification. The primary purpose of this is to get liquidity in hand to keep businesses open. However, if you want my statutory interpretation on that, I would say that you would not be able to do it if you're not going to use all the funds in a forgivable fashion. However, do I think that they are going to change or amend it? Yes. Do I think there is sufficient ambiguity so that you can file in good faith? And if they later come out and tell you to do that, again, you'd have to pay for my legal opinion, but I do not foresee from a policy perspective, them punishing you if you have to turn that money back in. But there have been numerous opportunities because they shifting guidance to return the money at any time without penalty, especially in that first round when we had the necessity test. And that necessity test, pretty wide open. You have to read it in the context of the time. When I make the application and it says, do I have any fear that this is going to affect my business? I think everyone was afraid it was going to affect their business. And not only affect it in the here and now, but in the future. Am I losing future business?
Right.
Are my accounts receivable going to go cold? I'm going from 60, 90 days to 120 to bankruptcy and they're never going to pay me. Like these are all factors, especially when you look at accrual versus cash method accounting, as I'm sure you're very cognizant and you deal with that all the time. We're going to be writing off a lot of bad debt on the accrual over the next several years. There are a lot of interesting things in both the CARES Act as well as this new act in terms of harvesting net operating losses and other things that can be done. Again, very complicated, a lot of stuff to unpack. A lot of it goes beyond the scope of what we're discussing here.
Jared, you want to take Matthew's question that was in line with, I think, the section that you spoke.
Okay, give me 1 second to find his question. So Matthew, if you've never received an initial round of PPP and you're able to use it over the 6 to 8 weeks, and there's still money left in the till, you are allowed to do a second draw. Now, depending on your business, it may make more sense to do a wide variety of things, including but not limited to going directly to the second draw based on the multiplier. Again, it's going to depend on your overarching business.
Mike McGuire asks, there with the community banks and have the priority one when the national banks start. I believe is it next week? I don't know that I have a set date, but I think it's early next week. Have you seen an exact date?
There is not an exact date. However, I've been told the portals will be open next week. They do not have an exact day. Several of the banks that we've dealt with that are on the national side have explicitly told me that they will be sending invitations to the portal to their pre-existing clients who have already done the first round of PPP. Again, we're going to be doing a lot of e-signatures on this. And again, you'll be filling in the application, and you may or may not get the maximum amount that you can under these portals simply because of the limitation. It's not a one-size-fits-all proposition, and you may need to contact your banker directly, especially if you have multiple locations. So that's something to point out.
Absolutely. One thing that you had mentioned that I wanted to clarify when I talked to on my segment, the 25% reduction by quarter, it's the basis of accounting used to prepare the tax return is what I believe is what they'll be looking at. So if you're a cash basis taxpayer on the tax return, it would be on the cash basis. If you're on accrual basis, you do it on the accrual basis. At least that's my interpretation of it. Do you see it the same way, Jared?
I agree. I think that there is the opportunity to change as long as there is a compelling business reason to do so other than just qualification. You know, especially given the pandemic and how I'm going to be reporting and paying estimated taxes, perhaps now I want to go to cash because those accounts receivable are no longer as reliable as they once were.
Right.
But again, I think that you are absolutely correct in stating that it should be based on your normal tax year and tax basis of accounting.
Next question from Peter indicated you have some employees that are Medicare, and can you issue them a check, I guess, to reimburse them and have that qualified under group insurance? I don't believe that's permissible. I think it's under group health insurance to reimburse them for their Medicare premiums. I don't think would fall under the definition of it. If there's more guidance out there, we'll see it. But initially, I don't believe that's the case.
Yeah, I believe that is in direct opposition to the underlying statutory language. I am more than happy to get creative with clients. We'll collaborate with clients within the ambit of good taste, but that is pretty egregious in my eyes in terms of what they specifically exclude from allowing you to do. I understand the reason why you would want to do it because obviously you're doing it, but the group healthcare plan is the group healthcare plan. Now, if you want to take out or supplement your plan or your retirement contributions or anything else and institute a SEP or 401k, there are a wide variety of things that you can do well within the ambit of the legislation that will be able to get that number up as long as you actually fund it. But again, you can't retroactively go back and do these things. You can do it on the forgiveness side, but you can't do it to get your number up. Your numbers are what they are. Again, we're using the 2019 and 2020 tax years. So you cannot change the past. If we could, then I would be able to be retired because I'd know what to buy. But again, there are things that can be done. That is not one of the things.
I believe they are all the questions there. Anything else, Jared, that you want to add?
No, I think that pretty much covers it. Again, look, depending on your specific business, you may be eligible for additional grants. I'm not just talking about federal grants. I'm talking about state and local grants.
Mm-hmm.
So keep your eyes open. NJEDA has a lot of great programs.
Mm-hmm.
You know, if you're struggling with rent, there are also other programs out there. And again, this is a very difficult time. Your professionals that you've employed for a number of years are there for you to help you. And if you have additional questions or concerns, I'm sure you can either reach out to Eric, myself, or Lou, and we would be happy to have an initial conversation with you to help you get through these difficult times.
And again, if I could interject, I would urge you not to go on the internet. I would urge you not to go to Google. You don't know what you're reading, who prepared it, how they prepared it, what it means. And my experience with respect to the CARES Act is very similar to my experience with respect to bankruptcy. Everybody has an opinion and everybody tells an opinion. And if you go back to high school, remember you did Whisper Down the Lane, you brought one kid in and they told the story to the next one who told the story to the next one. Well, you don't know if what you're reading is directly from the lawyer that the gentleman sat down with and got advice from, or it's 19 rows down. But you do know it's not a credible thing to base the survival of your family, the survival of your business, or the best way to make a good business decision. You need a professional. You need an accountant or you need a lawyer who you trust to walk you through this process for sure. The other thing I wanted to mention when you had mentioned banks, one of the banks that we use on a regular basis to do this has actually opened its portal. So I do think it's going to be sooner than later. I do think you should apply sooner than later, but not in a panic, because in the real world, it's better to get $500,000 the end of next week after you put all your money, everything together, and you've met with the professional, as opposed to getting $100,000 and being the first one in line on Friday to when the portal opens. You know, it's much better to do it correctly than to do it quickly.
Yeah, and Eric, I would further state that while we can make amendments to the first round, there's been no guidance as to how or if the banks are going to be willing to do amendments to your second draw application. One would think intuitively that they would allow you to do that. However, this is a government program. Nothing about it is intuitive. And when you're dealing with large and small banks, they may not have the capacity to go back in and sift through and resubmit your application. I mean, that's just the reality of it. They're receiving a ton of applications. Even though we anticipate that there will be less businesses applying, that's not necessarily the case. A lot of independent contractors and small businesses may be applying, and it takes the bank the same amount of time to do a large application as a small application. All right. And with that, I am done. I appreciate everyone taking the time to listen to what is surely a topic that is of concern, but it's a little dry. So we'll try to be more entertaining the next time. But the most important thing you can do is get as much money as humanly possible.
Absolutely. And if you have any questions directed to Cooper Levenson, you're welcome to reach out for Jared Stiles at J Stiles, just his first initial of his first name, at cooperlevenson.com, or E Browndorf at cooperlevenson.com. Lou, I don't know off the top of my head your email address, but if you could share it, that would be helpful for you and helpful for them to find you.
Yes, it's Lou B at fbkcpa.com. Thanks. Vicki?
Thank you all so much. In the meantime, Joe Molyneux is going to post a press release that he just received from the SBA announcing the dates that the applications will be open for everyone. So you can check the chat for that. And we will be sharing all this information. A reminder that we did record the program, so you'll be able to go back and watch the program again to miss any of this valuable information that you want to review again. And I'd just like to take a moment to thank our speakers again for sharing your valuable time and information with us. This was a great presentation. And if you will indulge me just a moment, I'd like to tell you about some upcoming programs that we have. Next Thursday, January 21st at 12 noon, Senator Mike Testa will be joining us at our regular membership meeting. Again, all these programs are on our Zoom platform, and you can find the information by going to CapeMayCountyChamber.com under the events tab. On Monday, January 25th, Assistant Commissioner of the New Jersey DEP, Vince Mazza, will be joining us to talk about the land use rule changes as a result of Governor Murphy's executive order on climate change. And these are going to be very important, especially in our coastal environment, to understand what these rule changes are going to mean for our future development in Cape May and Atlantic counties for sure. And then on Wednesday, February 11th, Yolanda Melville, again from Cooper Levenson, will be joining us in our HR series talking about why diversity is important for your business. And that again will be on Zoom, 10 o'clock on February 11th. So you want to be sure and join us for any of those programs that are important to your business. And they are all free to our chamber members. So please join us again. Thanks once more to all of our presenters and to Donna Vasir, who helps put these together from the Cooper Levenson team. And Lou, also, you kind of run the show on your education programs there at FBK. So thank you for putting all your stuff together there. So everyone have a great day and a great weekend that's coming up. And good luck on your PPP applications. So the press release is in the chat now. You won't see it after we close the Zoom room, but we will have it in our daily news brief. So watch your email at the end of the day for that as well. So have a great day, everyone.
Thank you, Vicki.